Hey everybody, good morning. This is Trendy John here at Simpler Trading. We're going to go ahead and go over this week's broad market analysis. We'll be covering today, the Sunday, the 6th, until Friday, the 11th. So this should be a really fun week. Right off the bat, we're going to get started with Market Watch using this week's major U.S. economic reports and Fed speakers. One thing that I noticed, just like last week, there's a lot of talking heads. As a reminder, all of these catalysts are just a catalyst that pushes price into supply and demand. And the advantage that we have is that we are identifying zones where we want to get long and or zones where we want to get short or bring those stops up on our long positions. That is the advantage. So you know, these catalysts, you want to know about them. You don't want to sit on your hands. You want to be able to take action at the zones. So we'll be going over those levels just here in a few minutes. On Monday, October the 7th, big thing here is just for me, anyways, is going to be consumer credit. Okay. And then again, a couple Fed heads talking. And then on the 8th, we have US trade deficit. And again, as you can see here, a lot of Fed heads speaking. And then coming into the 9th, it gets a little bit more interesting as we come into a lot of Fed heads speaking. All right. But then we had the minutes from the September FOMC meeting. And then on Thursday, so, again, it feels kind of like the same. We're opening up, and I'm going to show you this here in a few. We're opening up into some weekly supply or the trendy edges. So if we open up at certain levels, I'd be prepared for the market to kind of go sideways to down again. And then it starts to get interesting as we get closer into the afternoon of Wednesday with the FOMC meetings. And then we kind of heat it up on Thursday with initial jobless claims and then core CPI, CPI year over year. And then following that with Friday with core PPI and core PPI year over year. And then again, a lot of Fed heads speaking. So definitely a lot of catalysts out there on the schedule for this week, but just a bunch of noise, if you will. All right. And as you guys all know, price action is king. The next thing that we want to be looking at is earnings. So for me, I like to come over to X. We're going to take a look here. We're going to come over here and we're going to go ahead and click on Earning Whispers. This is what I use. It's always there. It's very convenient and always very consistent. When I click on this, we can see right away that we have some earnings, but it's still pretty bare, right? But some good names that are starting to pop up, such as Pep. And then as we get over into Thursday, you have Delta and then Domino's. And then Friday, we start heating it up with banks such as JPM, Wells Fargo, BlackRock, and so forth. So, again, bank earnings round the corner. I'd be paying attention to things like Citi, Bank of America, JPM, Goldman Sachs. All of those could be like really fun trades buying into smaller demand zones. And I'll have a couple focus charts in the room for you guys to look where we can get long and or short off of those charts. Okay. Next thing we're going to be looking at is the bigger picture of SPY. And what I like to use is the quarterly chart. There's a couple notes I want to go over. I'll just read those really quick to you. And again, I keep all my notes every week for the entire year. And far as the notes go today, the quarter closed out very bullish. 535 to 511 is now your support of the 4 quarter rally. Targets remain 568 to 580 and your 4 hour demand zone, okay, is at 568 by 565. It has been tested. I'll go over that a little bit later. And your resistance is 573.8. All right. And we closed out, you can see at 572.98. So when I talk about being very close to a level of supply, you could see that we're very close to it. So if we get that gap up tomorrow night or tonight or into tomorrow morning, then I am a little cautious on the move until we can show that we can build value above that. Let's go back to the beginning of this note. The quarter closed out very bullish. You guys can see that. Very nice candle here. Continuation candle. This is 4 candles in a row. So an entire year of bullish activity in the market. It is an election year, and that's right around the corner as well. I would imagine things start heating up, far as like outside influences, meaning around the election. So we definitely want to keep our eye on volatility. Couple things on the quarter chart that I want to show you is that again, the support. When I talk about the rally of the last four quarters, I'm taking my Fibonacci's and I'm anchoring them from this pivot low into the pivot high. And this is where I'm getting this 23.6 and 38.2. You guys all know about the historical probabilities of that, and I love them, and they're working very, very well. So, again, this is our support that we are referencing. Far as like near support, like something immediate, what you could do is just come in here and use these Fibonacci's here. So going into this week, 568 by 551, that's pretty close support. This is more in the event if we get some sort of scare in the market. This is where I want to be buying again inside this 23.6 and 38.2. And these levels up above here, these are Fibonacci extensions. And again, those remain the targets for this year. Once we get over one of these, then it becomes support until it's not. So, for example, if we come into this week, what I would say is we're over the 567 level. So that now becomes support. And you could see that even last week we came into that level and then we bounced very nicely, just showing you the value of understanding that. So what was resistance becomes support. And then our target up above that would be the next Fibonacci extension coming in at 581.58. Overall, I like to remind everybody on the quarterly, this is where, for me, things really tend to calm down. If you're one of these traders where you're having a very difficult time or you feel like the market's been hard for you, it might be that your concentration is just on too small of time frames. And so, therefore, you need to kind of relax and understand the bigger picture. And this is why I like to go over the quarterly chart every single week. All right. Let's go ahead and move on. Our next chart that we're going to look at is going to be the Qs. So that's going to be QQQ. All right, we're going to come right here and type in QQQ. And same thing, let's go ahead and take a look at the notes really fast. The notes read, the quarter candle closed out very bullish. Weekly supply is 493 by 503. And 493 is the target as long as the weekly 9 EMA holds this week. That is roughly at this moment around 476. And I'll be showing you guys this a little bit later. But on the 2 day, that's a 2 day chart. Not a lot of people use that, but there is an inside and up demand formation. We talked about this yesterday about anticipating inside and up formations and how powerful that can be. We do have one that has formed on the 2 day. This is suggesting that price will move up as long as we can hold the 485 by 477 level. Again, I want you to take note of the rally. We have, you could take your Fibonacci's from here into here. Find that 23.6 and 38.2. That's going to be our support of that rally, which is 465 by 441. And then below that, the 9 EMA then becomes support. And as always, just like on the SPY, you'll notice that we have this beautiful inside and up formation. Well, we have the same thing here on the Qs. This is the demand zone in case the election has some sort of surprise and you get a huge buy the dip opportunity, then I do believe that this zone will be tested into the future. And I like to remind everybody when we come in on this broad market analysis. Right now, if you would please just take a few seconds to go ahead and hit the like button on this video, I'd really appreciate it. During this time, it allows me to know that, hey, when I take the time on Sundays to put this video out, that you find this information useful. And it just, I just really, really appreciate it. So go ahead and hit the like and don't forget to share it. Share it with your friends either on X or your friends and family who are interested in trading. I'm sure if you're in the trendy room, a lot of you are doing very, very well. And I'm sure your friends and family around you want to know what you're doing. So please send them our way, okay? Thank you so much. Let's go ahead and move on. The next thing we're going to be looking at is I'm going to take you over here into let's pull this out of the way. Let's come over here to this chart. I'm going to go ahead and show you on QQQ, okay, what's going on with that 2 day zone. So we're going to go a little bit. And if you don't know how to do the 2 day zone, I'm going to show you real fast. So here's the daily. So we're going to click right here. We're going to hit time frame. Notice that it's on daily. We're going to come over here to the 2 day. We're going to hit OK. Okay, and then we're going to make sure this is on default. And there it is right there. So I'm anticipating the inside and up. And when we anticipate and we see that inside and up formation, we're obviously looking for price to push up. We hit the supply zone that I gave you several weeks ago to the tick. We pulled back. That was not a surprise. This is exactly what should be happening. We came down into the 9 EMA this past week. It moved really well from there. And again, things look pretty good. So I just want to reiterate what that looks like on this chart and why I'm anticipating a move up. But again, as a reminder, there's a couple other things I'll show you later on the dollar and the TNX that say, hey guys, it's room for caution. And because we're so close to the trendy edges, which are identifying supply, in this case because they're above price, is if we gap up into here, be careful. And I'd be careful until we can show that we can get value above those. For example, on the Qs, that level is at around 488 and a half. So that is going to be your immediate resistance on the QQQ. All right. And same thing over here. If I come over to the SPY, let's take a look. All right. So on the SPY, same thing. Notice that we have the trendy edges just above. We're very high on the curve. So yet again, I want you to be careful if we gap up into these areas. So I'm going to take this here at 573 and about 573.35, and then we'll take previous trendy edge at 573.90. If we were to gap up into this little section here on the SPY, then again, I'm going to have to see that price can actually build value above there and create a base and make a new higher high. Because if not, the overall sentiment going into this week is on a gap up. If we can't get through this, then I'm looking for sideways action to down. Okay, just like last week. And then, like I said, on the macroeconomic calendar, I'm looking for possibly things to kind of get a little bit more fun towards the end of Wednesday into Thursday. Okay. All right. So that sums it up on the SPY and Q. Now that leaves us to looking at the dollar. So we're going to come into the DXY. Now, the big thing about the dollar, I remember when I first started trading, I was like, well, what does that mean? The easiest way that I could tell you is that when the dollar's moving up, take a little bit of caution in the market. You usually see the market get a little volatile, little sideways, but most of the times it's sideways to down as long as the dollar is starting to trend up. Well, it was no surprise. I've gone over this week after week for years and years with you guys, is that we came down into demand. We got the bounce. We were expecting that. That's what happens when price comes into demand. And then price pushed up here. And these little colored levels here are just a Fibonacci. And I've taken a range and I've just like I showed you just a few minutes ago. And I identify that range and I use a little bit of methodology. All right. And with Fib, so we call it Fibonology. And this was the area that I gave you last week to say, hey, we want to be cautious. We are there. Price pushed up into the bearish channel, is what I call it. So, up and over this level, I want you to be careful in the market as it suggests that price could be going sideways to down if you're a bull. So, again, not caution if you're a bear. Then you want to see the dollar start to bid up and over this. Now, I'll tell you right up here, there's a nice little supply zone and it is confluent with the 618 or the golden Fibonacci. And because there's confluence there, this is really the end all be all, if you will, for me. Meaning, yes, I want to be cautious here, but if we build a base above there, then I start to get a little bit more concerned if I'm too net long in my portfolio. All right, but I wouldn't expect too much. From this candle, I actually think it could back off, which is why I think that we could see a gap up tonight in the futures. Okay, so that would be my short term overall sentiment for tonight going into the futures is that this is suggesting since we're hitting the bear channel that the dollar eases off a little, and then we see that gap up in the futures. But if that gap up is not super strong, it's literally just going to put us right into a supply zone. Okay, so we need to get up and over those levels that I just showed you on the SPY and QQQ. Also, notice that the cloud is here. The cloud is resistance until proven otherwise. So again, a little bit of confluence there with Fibonacci's and the cloud price needs to get up and above that. The next thing that I want to look at is the TNX or the 10-year Treasury. Basically, these two instruments last week and the skew were the reason why we were cautious going into the first portion of the week. I told you to expect the move to start to develop towards, I believe, Wednesday night to Thursday morning. That's exactly what we saw. It was an awesome week. I hope you guys did well. So let's look at the TNX, the 10-year Treasury. Guess what? It started to move from the demand zone. We were already expecting that. Price had pulled back. And again, just like the dollar, caution is warranted. This past week did get us above last week's level that I told you about, which was 3.87. You can see that we closed out at 3.98. So, yes, I am cautious here. However, uh, the 38.2, which is 4.018, this is the line in the sand, if you will, for tomorrow morning. So if we're up and over that, be careful. But just like the dollar, this is kind of the I say end all be all, but for the week, this would be my major level is a 618. It is also confluent with a little bit of supply there. So, I'd be shocked if we get up and over that and we don't find resistance, but just know that price is getting to that level where we want to be cautious. So, real fast, SPY, QQQ, TNX, right? SPY and QQQ very close to the upper side of that curve. So meaning be careful, we're close to supply, and then the TNX and the dollar also right at that cusp of saying, hey, we pushed up out of demand, we're hitting the bearish channel, and if we get up and over that, I need your little yellow flag to come out and be cautious going into this week. That leads me to the skew. The skew is a great instrument to use. I have videos out there explaining the skew. If you don't have any idea what it means, it's very, very important to my overall analysis. This year, we've been staying in this gray box. It's worked out very well. If any reason the skew comes down to this red label or red line right here, we buy 5 to 10 days out in the SPY calls. And anytime that we start to get up towards these record high levels, we want to be very cautious in the market. These are your hedge funds, basically saying risk on, risk off type. You'll notice that this past week we did come down a little bit. We're at 156, but that is still pretty high. But it doesn't mean that the market can't go up more. It's more towards this 165 to 170 level where it really starts to get extreme. And that's where you want to really lay off on your risk and just say, hey, I'm intraday trading. I'm only adding into long-term swing positions if we get significant dips. This is where I expect prices to dip in the market. So just know that. Okay. All right, let's go ahead and move on. The fear and greed index, that's going to be up at 74, right on the line. So let's say this one more time, SPY and QQQ, right at that level where we would look for sideways to down. So at supply, then you have the TNX and the dollar both sitting at a level where if they continue up, there's caution in the market. And then there's the fear and greed at 74 saying, hey guys, you're extremely greedy. All right. So I've seen this thing pegged to the right for quite some time. Doesn't mean that we can't continue to go to the right. And, things get over aggressive. And that's where you'll hear a lot of retail traders talk about RSI and that the market has to pull back. Remember, market doesn't have to do anything you want it to do. Price is king, levels are king. Just take action at the levels. Let all the noise out. Let it do what it's going to do. Let it corrupt everybody else. We are focused on supply and demand. Next thing that I want to talk about is going to be the futures, and this is one of my favorite parts of what I do. I think it's important. So if you have any questions, about futures, or if you've never traded futures, I'm here to tell you. I think it's a great, great thing to get into. I learned to trade futures to hedge my account. Um, and and for tax purposes. And I think futures can be really fun, but of course you need to reach out to your broker and see if that is fitting for you. And if it is, we use a strategy here at Trendy Trading that I love to teach. Every single morning, we go over the ES and NASDAQ with our buy triggers, short triggers, targets, and so forth. So if you're interested in that and you're a futures trader, please join us. A big portion of our traders are actually future traders, and we have a pretty big community. So, in saying that, I think they get a lot from us, not only from the option side, equity side, but also the futures. Okay. All right. So let's move on into those charts. We're going to take a look at them. So right over here, we're going to go with the ESZ 24. And here's the thing: if you watched last week, then you'll notice that I think the majority of these charts are actually going to have the same exact levels that we had last week, but I do want to go over what happened. So this is what your blueprint looks like right here. This is what your chart should look like on the weekly if interested. You can see that price did come back into our immediate support that we identified, and it worked really, really well. You can see that the week also closed up higher than the previous week, but did not make a new high. So again, all these levels are very important going forward. You can see that the 9 EMA is confluent with our immediate support. Just understand that the immediate support was tested, therefore it's not as fresh. And in trendy, we say fresh is best. To the upside, I want to identify these levels for you or with you. 58, 49, and 76 can be extension targets that you could see if price continues to get up and over and make a new pivot high. And then far as like a zone where I expect price to go to this year, as long as we are staying above these levels, I would expect it to kind of round out and maybe pull back in here. Okay. Next is going to be the daily. These are the same exact levels that I showed you last week, and I want to show you just how well they worked. Again, this would be Monday, Tuesday, Wednesday, Thursday, Friday. We talked about the first part of the week being sideways to down. We hit the resistance level that I gave you. Price indeed went sideways to down. It got to the trigger long that I also gave you in advance. This is where buyers showed up again in Thursday and then Friday, seeing that result, and again, that being a really special end to the week because at the end of the day, my analysis was spot on. Let's go ahead and move on. We're going to use these same levels this week. One thing that I will tell you is that you'll notice that the trendy edge is right here. Typically, what I do with my resistance level is bring it down to the trendy edge, but I'm going to leave it here. But if you want to know right off the bat, your resistance is at around 58.10. Okay, let's go ahead and I had that, sorry, that was on a 2 day, so my bad. Let's go back here. All right, and let's go back over this. So this is going to be Monday, Tuesday, Wednesday, Thursday, Friday. So that's what that looks like right there. Okay, so again, sideways down, and then we came in towards the end of the week, and buyers did show up. All right, so in saying that, we're going to go into the 4 hour. All right, so the 4 hour, this is what it looks like. And we came down, we created an inside and up formation. Just know it's been tested already. It is working. One of the beautiful things is once we went underneath the 9 EMA cloud here, that, this is where we're risk off and being more careful and looking to buy the dip. We found that dip, price worked, and it rolled to the upside, and you can see that the candles went from red to white. White candles mean neutral for me. We are transitioning from an exponential moving average perspective. We're crossing over and things are happening. But again, if you look very closely, you have an inside and down formation. You have trendy edges, these two yellow levels right here. These are going to be that resistance I just talked about. So please be careful. We said 58. Let's come down just a tad, 58.10. And then we're going to use this level up here. So right in here is going to be, if we gap up, just expect price to basically probably fail here. It's not until we can get up and over this and create a base above the previous high that we can start to see more targets to the upside. Okay. Let's go ahead now and go into the NASDAQ Z24. Again, I'm using the Z. We're going to go into the weekly. This is what it looks like, and you guys can see that last week, the previous week, we had come up and basically tested our supply zone. We weren't shocked. We were prepared for this price pull back. Right here, just to show you that value of that 9 EMA and how well it works. It also came into the immediate support level that I gave you last week. So this did work very, very well. The overall candle for the week, it looks like it's closed inside, but if you open this up just a little bit more, you'll see that we did close up above last week's close, so that is a bullish look. However, it's a pretty much indecision candle. It looks like this, and yeah, we're just gonna follow price, and I do believe that we head back towards the 20,574 as long as the 9 EMA and the media support are holding. Our next chart is going to be the daily. This time I got it right. So it's Monday, Tuesday, Wednesday, Thursday, Friday, just like that. Sideways to down for the first couple days. It came down into my trigger long, and this is where we saw buyers. So again, analysis was right on point. But just like everything else, we are opening. We'll see where we open today or tonight. But if we open in this area here, this is your first lines of resistance. So I'm keeping the levels what they were because I think we need to hold strong for 2 weeks, meaning I really want to see this level work in here for buyers. And if we push up, just know that this is going to be the previous resistance, and I do believe that will be resistance again. Your immediate resistance, we just use these trendy edges, and those are coming in around 20,270 by about 20,342. Let's go ahead and move on into the 4 hour. This is your zone for this week. This is the same one as last week. It did work. We went red to white to green. So the momentum is changing. The EMAs are crossing. The momentum is looking good, but again, leading you right into possible resistance on tonight or tomorrow morning's open if we get the gap up. This level has been tested, so fresh is the best. Just remember that. We went over some of our training yesterday, Saturday. We spent a nice 2 hours with you guys. I really appreciated you showing up. We had a huge turnout. And again, I appreciate that. Okay. These are the levels down below just in case this guy does not work. And again, these are the levels to the upside. That's what I have today far as the NASDAQ. And now we're going to take a look at Bitcoin. So I do hold Bitcoin, Ethereum, and a couple other crypto coins. I've shared those with you guys, and I want to give you the chart and kind of show you what's going on with Bitcoin. So Bitcoin has come down into a level of demand. We did find buyers here, and it looks a lot like what I'm showing you is that we're opening up, but this is a little bit better because we're lower on the curve. Notice these two yellow levels right here. Um, as long as we're close to the bottom here, I like to buy. Okay. And if we were opening up here, then I'd be telling you the same thing that I was seeing in the ES and the NASDAQ. Be careful. So I like that we're lower on the curve. And when I say lower on the curve, guys, basically I'm just saying from these two levels here, I want to be a buyer towards this. All right. I want to be cautious if we're underneath it. And I want to be looking at trimming and or selling. However, disclaimer, I'm long term in these positions. I'm not looking at selling or trimming. The only thing that I'm doing with Bitcoin is I'm adding in every time we get a dip. All right. So this year has worked out really, really well. We hit our 2024 target that I gave you last December. So we're happy. But I do want to talk about the election. I do believe will have a big impact on the entire market to include Bitcoin. If it's bullish this year, I do believe we can push up towards 86,000 by 103,000. And if it's bearish, then I do believe that we could pull all the way back to around 35,000 to about 32,000. That is the bigger levels. For right now, your support is around 52,000 by 46, and we've hit our 24 target. We have a high. We need to see a base established above 72 or 73,000. That is my overall analysis and my broad market analysis for this week. If you guys have any questions or you want to join us at simplertrading.com, check me out there. Just click on Our Traders and you can come across Trendy John and see what we provide here. I look forward to seeing you in the room. Have an amazing Sunday. Talk to you soon.